fact that the main purpose why the Ethereum exists, this was kind of mandatory. So I'm not seeing a lot of price changed just because of that. As far as the end user is concerned, they may not even know that something like this happened behind the scenes. So yeah, I'm not concerned.
What I would say is it would definitely change the perception of how corporates view crypto.
Hmm.
One of the fundamental reasons being that with what started happening early last year in 2021 was MicroStrategy sort of adopting Bitcoin. Then Tesla put it on its balance sheet. Square had put it on its balance sheet. The expected sort of trigger of that was the other companies would sort of adopt it and put a part of their corporate treasury into Bitcoin. But that didn't go ahead because the requirement in terms of an ESG compliance and that could not be met with having Bitcoin on your balance sheet, which was the trigger for a lot of companies not to adopt Bitcoin on the balance sheet. But now Ethereum presents a credible alternative to that. And that would be interesting to see if companies start adopting and start putting Ethereum on the balance sheet. And that would not see the same sort of resistance that Bitcoin saw because of the way proof of stake works.
Crypto enthusiasts fighting with each other, who are either Bitcoin maximalists or people who are supporting Ethereum. Though they keep fighting from an investor mindset, it's more about has the crypto proved the test of time,
Hmm.
right? That is more
Yes.
critical.
Hmm.
That's when big institutions start investing. Like how Gaurav said, institutions started having Bitcoin in their
Hmm.
part of their asset classes because it has proved the test of time. Ethereum is getting a lot of gains there, but it has to prove that all these upgrades will keep it stable, and it will keep going perfectly in its direction on the merge, splurge, verge, and all in all the
Right.
milestones
Hmm.
ahead.
Right. Seeing the supply of Ethereum in the market, and also how do you assess this sort of impacting the overall valuation of the token? Because Ethereum is definitely one of the, like, it's the second largest token in terms of valuation as well as in terms of stability. It's well trusted. So, how is that scenario going to change now?
Yeah, if we are talking about the new ether that will get into
Hmm.
the ecosystem, I think it was somewhere around 12,400 or something like that, if I remember it right. That was the kind of number of ether that was getting added to the ecosystem every single day till the merge. And after merge, it is one tenth of it. So that also makes sense because it was, I mean, before it was essential that whoever are putting efforts through mining are getting rewarded, and it was kind of people or the miners would compare the profitability, so how much ether they are getting and how much they're spending on mining equipment and electricity, etc. And
Hmm.
now it is purely based upon staking,
Yeah.
so which does not require that kind of electricity. In fact, it only requires like 0.5% of electricity only, as compared to how much it used to be before. It makes sense that the new supply went down by like 90% of it. We are only getting like 1,200 and odd the coins, I mean, ether right now per day. So, and again, if we are looking at impacts on the pricing and such, some part of these coins which are mined nowadays or after merge are also being burned, right? So, which means
Hmm.
it will just get removed from the ecosystem also. So whichever, I mean, whatever people are using it for transaction fees and such. So, I believe that this particular price. But it will not take too much of impact. I think again
Hmm.
because of this exact reason. I think these are kind of well calculated before changing the rules of the game. So which has gone down by 90% of the supply, new supply, right? So obviously this would have been factored in, I believe. Yeah.
Yeah. Gaurav, coming to you, how do you assess this?
Short term, things usually move in anticipation of something. So merge was anticipated, hence price started going up and it went twice of what it was just a couple of months back. June the price was somewhere around $900. It went to about $2,000 in the next couple of months. And then as the merge event happened, the anticipation has sort of gone down, right? So people are now selling it because They wanted to take that exposure in terms of the event that was happening. Similar to this reduction in supply is a long-term net positive. So it would not reflect in the shorter term, but in the longer term, it definitely builds it that way that Ethereum would sort of go upwards. That's one. The second thing is Ethereum is also interest bearing. That makes it really interesting because if a lot of the other sort of options that were out there did not have the interest bearing part, for example, 2020, all the bonds, that government bonds or any of these financial instruments didn't have a lot of interest on top of that. That gives a sense that other sort of opportunities in terms of how you diversify your portfolio, you have an interest bearing asset denominated in the same currency where you can take exposure. So I think these are a couple of things that are getting enabled with the merge, and long term that's a net positive. Short term, the event has happened and people are now selling off because they had taken exposure earlier.
What is the mining scenario in India like, and uh, what will Ethereum moving?
The players in India could be very, very minimal compared to that. There could
Hmm.
be some miners who could be into earth mining, but comparatively, I think they're much low, considering the electricity rates and hence the
Hmm.
ROI that they can generate by running a mining rig here. That should be comparatively low, and it will not be much of a sustainable operation for them to keep doing it in a larger scale, right?
Hmm.
Most of them might have it in a smaller scale, but larger scale, a lot of miners doing it in India, the ROIs cannot really kick in well. So from that perspective, an India perspective, I think this switch will have a lesser impact.
Hmm.
That's my view. Yeah.
So in a country like India, where electricity is at least 4 rupees per unit, and it goes up to like 7, 8. In fact, parts of some parts of South India is even, I mean, as costly as eight
Hmm.
rupees, right? So at this kind of cost, it was kind of not profitable for people to invest in mining equipments. And then here the temperature is also like significant, right? So it's one of the major reasons why people need electricity is to cool down the air around the miner so that it can perform better. So with those two things being like quite costly, it was not profitable, and I don't think a lot of mining operations does exist in India.
Yeah.
Even though there are some who are just experimenting to understand how things works, but it cannot be a business. I don't think so. So there are people who invest in miners by buying shares of other mining farms, so that they earn through that, where the mining farms are run in other countries like Greenland and such, but not really in India, I think.
I think, sorry, just like what Satwik mentioned, right? I think the
Hmm.
mining activity in India is almost negligible because, like he mentioned, it's not profitable. But I think the opportunity here is the fact that ever since Ethereum has moved from proof of work to proof of stake, and all it takes is typically 32 Ether for someone to stake. For large traders, here is an opportunity for them to now be a part of this a validating network, right? Which earlier was not possible when it was proof of work. So we might now see a lot of people from India staking their ETH and trying to be a part of the system.
Cambridge's Bitcoin electricity consumption index, US has the highest monthly hash rate of 37%. China has around 21%, but India is far behind at 0.03%. So, Sharon, like what you're essentially saying is that this opens up actually a new avenue where Indians can also participate in this part of the ecosystem.
Sharon, if you could take it first, what do you see the impact on Polygon? Because obviously it's everywhere now. It's a global platform. Everything. Sandeep has been saying that it will make Ethereum merge will make Web3 more mainstream, and we'll see much more builders now and all of that. But how do you see the impact of Ethereum merge on Polygon going forward?
I really don't see an immediate impact as such, right? Because what Ethereum is trying to do today is try to be more secure and try to move out the consensus, right? And what L2s like Polygon focuses on scalability. I think until the sharding aspect like really comes in, that is the next one, the surge. Until that comes in, scalability is not going to be scalability is not going to be a focus area for Ethereum. Earlier, before they started this whole merge thing, they were trying to do scalability and moving from proof of work to proof of stake together, but then they deprioritized the Ethereum, the group together deprioritized scalability problems, saying that we'll first make the movement and then figure out what to do scalability, because we already have L2s helping us out with the scalability issue. I think going forward also L2s will play a huge role in terms of being the scaling layer for Ethereum, and this whole sharding thing that is going to get implemented in Ethereum will kind of complement it. So I really don't see it affecting L2s adversely. Uh,
Right.
uh, and I think it's going to be more of complementary than an adverse effect.
Okay. Okay. Coming to you, Gaurav.
Yeah, so one Polygon is not an L2. L2s would be typically a product like Arbitrum or Optimism. Polygon is a side chain in itself, so it has its own validated network and sort of consensus mechanism. Um, what it typically does, though, is that it clearly addresses some of the concerns that were out there about Ethereum. One is this is a very, very big event in terms of remote, coordinated open source software development. To build something like this, where you're coordinating with hundreds of developers across the world, and doing something which cannot be reversed is a pretty big mammoth sort of a feat in open source development. And Ethereum has clearly shown that they're able to sort of do that, which basically builds in credibility in terms of the next steps that they're promising with respect to sharding, with respect to
Yeah.
scalability.
Yeah.
And that was what was earlier questioned.
Yeah.
That was the question, and that's precisely why some of the chains like Solana or others started sort of gaining mainstream acceptance, saying, ki, hey, these process much higher amount of throughput of transactions, and this is there and that is there. But now it is pretty clear that some of these alt chains that are out there would face a much tougher task because Ethereum already has the strongest dev community. They have proven that they can sort of ship things, even though it got delayed a few times. And the third thing it sort of also builds is now they are not also energy dependent to sort of run operations. It is also like environment friendly. So some of those arguments have been sort of punctured, and that makes it harder journey for the other altcoins like a Solana, Cardano, Tron, and others.
Right, right. Gaurav, continuing with that, and Sharon can take over after that. There were a lot of, what I understand, there were a lot of discussions around building other layer ones, right? In Web3 world, a lot of developers have been researching and have started those projects. We also have Shardium being built as a layer one. How difficult or easy it is at this point of time to build a layer one for a global ecosystem?
Correct. So, one is a lot of the layer ones are typically just forks of the Ethereum code base. So, there is something called as Ethereum virtual machine, which runs the Ethereum blockchain. And so, if you see a Binance Smart Chain or some of these other sort of chains that are out there, they are just sort of modifications of the core Ethereum virtual machine that sort of runs. So this is why their addresses would be same. So if your address, one address you have, the address would say same address would work on a Binance Smart Chain, same address would work on some of these compatible EVM chains that are out there. Couple of the blockchains had this similar sort of approach, and that's where Solana and a few others were sort of out there. And I see like over time, the way you're sort of trying to build things, it is hard to build a differentiated blockchains, which would also see developer adoption because getting that adoption is hard. This is precisely why most of the chains that were out there just used the entire EVM infrastructure and made changes to it and basically started onboarding sort of users because then the same sort of private key works, same MetaMask sort of a wallet would work. Versus if you sort of create an entirely new chain, you need to have new set of tools. You'll have to have a different set of a wallet, different consensus mechanisms, and all those sort of things. So some of these attempts that are happening would be interesting, but I would say Ethereum would still continue to occupy more than 90% of all the blockchain ecosystem sort of chains that are out there in terms of developer activity, in terms of actual total value locked, and in terms of actual transactional throughput around like products that are out there.
Scale. So building an L1 today, typical path that most people take is to kind of fork one of those Ethereum, fork the Ethereum chain, right? Because it allows a lot of developer to just migrate the program easily and all of that, leading to more adoption. But I think building like the building an L1 today in a different way from what an Ethereum or a standard L1 already does is a very challenging task and would require a lot more smart people to come into the system and think about it.
Okay. Vikram, I'd like to come to you, just going back on the part where now Ethereum will earn you interest. It's sort of changed the way it really works, like the way it was working earlier with proof of work, and now with proof of stake, you can get interest on that. And not just that, will this really, on the larger front, uh, people who were on the sidelines, people who had apprehensions about the energy consumption, will this bring those people also into crypto? So on both those fronts, what's your view?
Uh, See, so now one of the major differences it has created is you don't need a powerful machine. You don't need large investment per se to run these rigs and electricity consumptions to participate in earning rewards from the network, right? Now, if you're able to put in 32eth, or if you guys, or if you join any player like a Lido or someone who's pooling in to stake, you can now be part of this validator pool. Earlier this was not possible, right? You definitely had to spend a lot to earn something
Yeah.
by being in the consensus layer. Now that is taken out. So this ideally, the major difference what it's causing is it brings in a lot of players into the ecosystem than being concentrated with few miners, right? So one of the key arrangements here is how decentralization is being brought into due to this proof of stake. So from that perspective, it's a big change. A lot of participants can enter into the ecosystem and